So move on to Truworths. It's a leading fashion retailer on the JSE. They operate over 257 stores in South Africa. They've got 14 franchise operations in Africa and the Middle East, and they're now competing with more foreign operators such as Spain's Zara, which of course recently opened up shop here in South Africa. Truworths has a market cap of 36.9 billion rand and a price to earnings ratio of 16, slightly below what we're seeing from Woolworths. Let's talk about their margins. I mean, just looking at their gross profit margin, 56.9%. Is that something that's sustainable as we go into the rest of the trading year now, when you see numbers like that, operating margin 36.8%?
Look, you've got to give them the benefit of the doubt. They've been the top retailer in the high-end youthful fashion market for quite some time. They've been growing their earnings. Compound earnings growth there is 20% plus. I think it's more like 25% over a number of years. Your question on the margin could come under pressure. There's definitely, for the first time, some international competition coming directly into the country. You've mentioned the likes of Zara. You've also got Gap opening up stores. So the high-end fashion is going to be very competitive. And I think out of all the stocks we're discussing tonight, I would question whether Truworths can continue with those types of margins. And
you've also got them focusing, you talk about high-end fashion, but they're focusing on the low-income segment of the market. Identity has been one of the strongest performers, of course, and not the biggest revenue earner, but 25% growth is what we saw in the previous reporting period. They opened up 10 new Identity stores, so they're focusing on that end of the market. Do you think this is the right strategy for Truworths right now?
Yeah, I think it is, and they all do this. So sometimes when you wander around a mall in South Africa, you think, wow, look at this new store. But what it turns out is it belongs to the guys next door that's just been around for 50 years. So they've done that. They've also got YDE, which is the Young Designers Emporium. So it's not as though they're not targeting the younger market, even though their core market is the sort of upper middle income, slightly older person, apparently.
Well, they say they are focusing on the youthful side of the market right
Correctly
now.
So,
not
because
the youthful.
The fact of the matter is that we are a young country, and there are many, many more people that are entering the market for the first time with a credit card in hand that they've not had before. So I think that is the right strategy. I think one of the key factors we've got to put on the table, though, tonight is there are those that are operating in the retail space that just sell stuff principally on a cash basis, and those that operate a credit book. Truworths was one of the first to do the credit thing, and they really do it very well. And so as their book has grown, people have wondered whether they can continue to experience low bad debts and all that kind of stuff. And yet they have been able to do so, it seems. So people appear to be happy to pay their Truworths card off and not default in it, whereas they've not been as well behaved with regard to other credit products.
That's interesting, because also bringing in the Identity story right now, where we saw a lot of growth, the credit card sales growth for Identity was up by 57%. So they experience growth in credit. People who are shopping at Identity, perhaps in the low income space, are buying on credit. Is this not a concern?
I don't think it's a concern. I don't believe the credit levels are as high as you're seeing a lot of press concentrating on credit and unsecured lending at the moment. And I still believe there's a way that they can go. Paul rightly mentions they were first, and I think they've been the best at managing it.
So like a Capitec, they understand the model of lending, they understand the risk, and they're getting it right so far.
Absolutely. My only concern with Truworths is, and it's really a bit unfair, is that they've done everything so well that they're now at a point where it's difficult to increase their operational efficiencies effectively, increase their margins through doing things better. They're doing things well already. So I think they are priced a little bit for perfection. You've kind of seen that in the last couple of months where the share price has come off relative to the others. I think the others that we're going to be talking about tonight have the opportunities to do things a little bit better in terms of their merchandising, trading densities and the like.
It's trading at what, just above 80 Rand today. It hasn't performed as well as the likes of Woolworths year to date, up just over 10%. So are you saying that you're concerned where the growth is going to come from? What does that mean with regards to whether it's hot or not tonight?
Yeah, I'm going to go not with Truworths, and it's a difficult decision, but we've got to go not on something. And it is a sector we obviously like, but I'm going to go not because, as I said, I think it's going to be difficult for them to do what the others can do in terms of operational efficiencies and increasing margins.
Where do you stand on Truworths tonight?
I'm going to say I'm ditto with Phil on that one, so not as hot as the others.
Two nots on Truworths.